So friends, let us continue. Put the heading in your notes. Inherent limitations of audit. Okay, I'll give you some simple examples so that you understand what actually the problems are. Why can't I express absolute opinion? I'll tell you. A funny way, so it will be jovial also, you'll enjoy these examples also, and at the same time you remember it in your mind. Say for example, one person went to a hospital. Doctor said, give your blood for test. Doctor said, give your blood for test. So you went to the lab. Say for example, in your body, in your example, only numeric example I'm telling you, in your body 5 liters of blood is there. Will they take all 5 liters of blood out of your body and will they test your, blood in buckets? You will die, right? So it is not possible. Or at least can I take 1 liter of your blood? No. If 5 liters blood is available, if this is the blood content in your body, how much will be taken, this much will be taken. 20 ml will be taken. 2 ml will be taken, not 20, I'm sorry. 2 ml will be taken. This little. In the syringe, out of 5 ml syringe, they'll take only 2 ml, 3 ml. For that itself, we feel like, come on, my blood, this nurse is taking my blood. Now the question is, this is the blood in your body. This is the blood I have taken. So this is called population. This is called sample. Now for practical reasons, can I verify the population? Can I verify the population? The answer is no. Can I verify the population? The answer is no. So what should I do? There is only one way, sampling. What should I do? There is only one way, sampling. So what they do, so out of 100% of population, they have taken, say for example, 1% sample. In this 1% sample, say 30 particles are there, 30 particles, only for example. In this 1% of blood, there are 30 particles. In the lab, when they are looking at, they saw 30 particles. What they do, for 1% if it is 30, for 100% it will be 30 into 100, that is 3000. This is called projection. In the projection, there can be projection error. So we'll discuss about audit sampling in detail. In both old syllabus and new syllabus, audit sampling in detail is discussed. The standard is there and a lesson is also there. We discuss everything. But for now, what we need to understand is, write down in your notes, 1. Audit sampling. Put the heading, audit sampling. Under that, write down, considering the volume of transactions, comma, the time and cost constraints. The time and cost constraints. It is not practical. It is not practical to verify 100% of items. Considering the volume of transactions, the time and cost constraints, it is not practical to verify 100% of items. In this situation, the auditor chooses audit sampling. In this situation, the auditor chooses audit sampling. Audit sampling refers to verification of Audit sampling refers to verification of less than 100. Less than 100% of items. So what is that? Audit sampling refers to less than 100% of items. And projecting the findings or results of sample to the whole population. Audit sampling refers to verification of less than 100% of items and projecting the findings or results of sample to the whole population. So this is allowed. Audit sampling is allowed. Nowhere it is stated that you cannot do audit sampling. There are certain items where audit sampling is not recommended. It is not to be done. But in general, for regular items, audit sampling is allowed. So in a situation where there is Reliance Trend, I am conducting audit of Reliance Fresh or Reliance Trends. Okay, in Reliance Trends, daily thousands of transactions will happen. Thousands of sale. So in a year there can be 1 crore transactions. How many deposits and withdrawals will be there in SBI? How many fixed deposits will be there in SBI? How many overdraft accounts will be there in SBI? So in petrol filling station, how many times petrol is sold in a year? How many transactions will happen? So do you think it is possible or viable for you to verify all these things? So even I am conducting audit of a small bakery roadside also. There is a small bakery roadside. Do you think I will be able to note down and verify all the cups of tea sold, all the snacks sold, so all the cakes sold? Do you think in a year, if 1 lakh number of transactions are there, can I verify 1 lakh number of transactions? No. So what I do is auditor conducts sampling. Auditor conducts sampling. So out of 100 vouchers, I verify 10 vouchers. Out of 100 debtors, I conduct confirmation from 10 debtors confirmation. Out of 1000 employees in a company, 1000 employees are working in a company. I want to, as an auditor, I want to verify employee records. Can I verify 1000 employee records? No. On random sampling, I will verify 20-25 employee records and I will see whether the documents and the data in the system, everything is proper or no. Whether the payment of salaries to these people is proper or no. I can verify on sampling basis. So one of the biggest problem is audit sampling. Audit sampling is inevitable. I cannot avoid audit sampling. Whether it is a small audit or big audit, I have done audit of small sole proprietors roadside, and I have also conducted audit of Reserve Bank of India. I have conducted personally in my life, I have conducted audit of Reserve Bank of India and State Bank of India. So whether I am conducting audit of a sole proprietor or Reserve Bank of India, at times I have to depend on sampling. At times I have to depend on sampling, or majority of times audit sampling is inevitable. So now imagine this is the total population. In this total population, this is my sample. This is my sample. So this sample is, imagine, 10% sample. So there are 10,000 transactions. Or let us assume that the total volume, the total amount of sales is 1 crore. 1 crore rupees of sales. So I have tested 10% of transactions. So in this 10% of transactions, there are 25,000 rupees mistakes. there are 25,000 rupees mistakes. So what are the misstatements? Misstatements are 25,000 in the sample. So what I have done, you know, for 10% verification, if it is 25,000, for 100% verification, the misstatements are 2,50,000. This is what the conclusion I have drawn. This could be wrong. So the actual error can be less than 2,50,000 or actual error can be more than 2,50,000 also. So out of this 10 transactions, there are no mistakes, but that is not a guarantee that this 90% of transactions also there is no mistake. So I concluded 10 vouchers I verified out of 100 and I said that this 10 vouchers, there are no mistakes. Can I guarantee that in remaining 90% there are no mistakes? So in this remaining 90% there can be a very big fraud. In this remaining 90% there can be a very big, error. This is the problem. But still, I cannot avoid audit sampling. So what is the question we started? Why auditor cannot give absolute assurance? Why auditor cannot give absolute assurance? Because of inherent limitations of audit, absolute assurance cannot be given. Absolute assurance cannot be given. Now, student will ask a doubt. Those who are not doing articles, they will get a doubt. Pavan sir, do you think it is easy for you to verify 2% of transactions sample, and will it be easy for you to give opinion on 100% of population? Don't you think, Pavan sir, this is difficult? Now, my dear friend, I tell you, your mom, when she is cooking, okay, 1 kg, say for example, 1 kg biryani she is cooking, 1 kg curry she is cooking, half kg curry she is cooking. She'll take 1 or 2 pieces of curry with a spoon. She'll taste that and say masala and all the ingredients, salt, everything is fine. That is nothing but sampling. So a doctor, if you go, he'll check your pulse for 10 seconds or 1 minute and say you are fine. If a household lady can do that in her kitchen, if a doctor can do that with the patient, I am a chartered accountant. Why can't I do this? This is what called skill and experience. No, you should learn. You should learn how to do that. You should learn how to do that. Now student will ask, Pavan sir, I am convinced with your examples, but still I feel this is too much of risk. That is the reason when you are going for audit sampling, before designing the sample size. What is sample size? Before designing the sample size. Now I told you in the definition, audit sampling refers to verification of items of less than 100%. That means 1% is also sampling, 99% is also sampling. Now it has become a very big issue. So should I verify 1% of transaction? Should I verify 50% of transaction? Should I verify 25% of transaction? Should I verify 90% of transactions? This is called extent of verification, audit planning. You might have studied in audit planning the extent of verification. What should be the sample size? What should be the sample size? Now, what is the question? What should be the sample size? This is a professional judgment of auditor. Do you remember yesterday we have seen IOCPP? Ethics. In professional ethics, I have seen the ethical requirements: integrity, objectivity, confidentiality, then professional judgment, professional skill and care, professional skepticism. Do you remember? Okay, now. So, how this professional judgment can be formed? There is a process called evaluation of internal control system. There is a process called evaluation of internal control system. So what I want to do, I want to evaluate internal control system. Let us go back to Reliance Trend. Let us go back to Reliance Trend. So in Reliance Trend, there are 1 crore transactions, but can I verify 1 crore transactions? No. What am I supposed to do? I want to ensure that the Reliance Trend has controls in place where shirts and pants cannot be stolen, where unbilled goods cannot be taken out, where employees cannot commit fraud, where employees cannot misappropriate sales money, where whatever the amount that is sold is properly credited into the bank account of the company, where one customer and one sales boy cannot collude, cannot join hands to do a fraud. So if I verify all these things, I verified control systems. If control systems are strong, frauds will be less. So this is internal control system and evaluation of internal control system. So inherent limitations of audit we are discussing. First one I told you, audit sampling. Second one is internal control system. Second one is internal control system. So auditor evaluates the internal control system of a client. So to design this internal control system, management is responsible. So at the time of audit, I verified certain controls and it is good. But what is the guarantee that 365 days these controls are properly implemented? So during the audit, I checked whether this laptop has a password. This laptop has a password. So I am happy. So accounting information cannot be stolen. Unauthorized journal entries are not possible. But company knows that Pavan sir will come, auditor will come today, so they have put the password. If 365 days password is not there, employee A can enter data, employee B can enter data, employee C can enter data. How will you identify? How will you control the data? So there are certain systems where client is not properly doing something. How can you blame me? How can you ask 100% of absolute assurance you want, which is not possible? So the internal control system is the biggest, inherent limitation. So about this internal control system, we'll discuss in detail. 3 series is there, 315 is there, 320 is there, standard on audit. And then chapter 4 in old syllabus is there, new syllabus chapter is there. So we'll discuss about internal controls later also. Then the third one is, what is the third inherent limitation? Audit evidence in general. Majority of audit evidence is persuasive rather than conclusive, but not conclusive. Persuasive rather than conclusive. So what is conclusive? Conclusive means it is concluding the transaction. For example, I bought a house property. Okay, so you asked Pavan sir, give me stamp papers. I want to see whether you are the owner or no. You are my auditor. He said, Pavan sir, give stamp paper. I said, Lelo, this is stamp paper. So you verified stamp papers and then you applied accounting standard 10. You applied property, plant and equipment accounting standard to value this asset, and you said that the asset's value is 2.1 crore. Then you opened my balance sheet, 2.1 crore. Ownership, correct. Valuation, correct. Then you said, okay, proper. But every transaction will not have conclusive evidence like this, no? For every transaction, do you think stamp paper will be there? Say, for example, I said, I am the owner of this mobile phone. I am the owner of this mobile phone. Can you verify that? You can verify, but don't you think there is no stamp paper for this? And then I said, I am the owner of this pen. Can you verify this? I said, traveling expenditure, 100 rupees. Can you verify whether I traveled actually or no? So majority of the audit evidence persuades, that means it will request the auditor, dear auditor, accept this as audit evidence. That means what, in the absence of any evidence to the contrary, the auditor is forced, or rather persuaded, that means pleasing, sir, please accept. So auditor is forced or persuaded to believe that the audit evidence is genuine. It is something like, you have given a petrol bill to me. You are my client, I am your auditor, you have given petrol bill. Pavan sir, 2500 rupees petrol. But can I verify actually whether you have filled 2500 rupees of petrol in your car or no? Sometimes what happens, you have put 500 rupees petrol and you asked the petrol filling station guy, Anna, give me bill for 2500. Sometimes they'll give you blank bill also. They will ask you whatever you want to write, you write. Why? Anyway, that is not original bill for them. They'll have dummy bill books for this. It is a fraud. So when you submitted 2500 rupees petrol bill, I saw petrol bill, how can I evaluate whether this petrol bill is correct or no? I have to say, chalo, correct. This is called persuasive evidence. So whether I can evaluate every evidence with 100% certainty? No. This is third problem. What is third inherent limitation? Audit evidence is persuasive in nature rather than conclusive. Then four, professional judgments. So there are so many estimations by management. For example, depreciation. For example, provision. So how can I verify this? Depreciation, see, you have one asset. You said depreciation on asset is 10,000. Can I verify whether the diminution in the value of asset is 10,000 exactly? Difficult. So estimations are, practically very difficult to audit. And another thing is auditors' professional judgments. Auditors' judgments. So I want to conduct 22% of verification of items. So maybe 22% is wrong. You should have done 24% or 80%. This is what we call the potentiality of human error. So judgments, there could be, something wrong in the judgments, in the opinions. Alternatives could be there. Depreciation can be charged in 8 models. This guy followed 1 model. Even accounting standard accepted 2 models. So this guy has done 1 model. Okay. This is one reason. There can be misstatements in financial statements because of estimates, because of judgments, which cannot be verified with 100% accuracy. Okay. And financial statements are prepared to a very big extent using estimates. Financial statements are prepared to a very big extent using estimates. So these are the inherent limitations of audit. The nature of accounting, the nature of recording transactions, and the manner of preparation of financial statements. Since they include estimates, valuations, provisions, all these are, judgments. So I can judge an event, but how can I judge opinion of a person? That is very difficult. So, my dear friend, because of these reasons, because of these inherent limitations of the audit, I am sorry, I cannot give absolute assurance to you. I can give only reasonable assurance to you. So what are the inherent limitations of audit? Tell me. Point number 1, audit sampling. What is audit sampling? Audit sampling refers to the process of picking up a sample, that means less than 100% of items, verify less than 100% of items, come to a conclusion about this 5%, project it to 100%. This is called audit sampling. So in audit sampling is compulsory. When you conduct a 20% sample, in remaining 80% there can be frauds, in remaining 80% there can be misstatements. This is a risk. This is a risk. Point number 2. Internal control systems. So client has set up internal control system, auditor evaluated, but is it adequate control system? Is it continuously operating effectively? Is it, meeting the purpose? All these things are again subjective. I am verifying one day, but 364 days I don't know, na? So cash controls, whether cash is kept in lock and key, one day I verified there is lock, but 364 days, how can I verify every day? So the responsibility of management that they should design internal control systems, whether they are doing it or no, I don't know. And internal control system themselves, they have inherent limitations again. Third one is majority of the audit evidence obtained by the auditor is persuasive in nature rather than conclusive. Fourth one is audit involves so many judgments from the side of management in preparation of financial statements, the nature and the manner of financial statements and how you prepare financial statements and all, and the auditor's judgments, all these things, potentiality of human error, there can be something wrong in the process. Because of these reasons, we cannot give absolute assurance. You understand that? You understand that these are inherent limitations of audit. Very, 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 very important question from exam point of view. So you need to read it thoroughly.